Greetings, tech enthusiasts and fellow investors, and welcome to Stocks Telegraph. Buckle up, because we're about to blast off into the stratosphere of the chip world. Nvidia, trading under the ticker NVDA, the undisputed leader in graphics processing units, has defied gravity once again, reaching a new peak that would make even Sir Edmund Hillary jealous, a market capitalization exceeding a staggering $3 trillion. This monumental achievement propels Nvidia to the number 2 spot on the podium of the most valuable U.S. companies, surpassing the tech titan Apple. While Microsoft still reigns supreme, Nvidia's meteoric rise begs the question, what's next for this chip giant? Is this just the beginning, or are we witnessing the peak of the Nvidia phenomenon? Let's dive into the databanks and explore the future of Nvidia. Before we delve into the financial nitty-gritty, we want to hear from you. Are you surprised by Nvidia's astronomical rise? What factors do you believe are driving this incredible growth? Leave a comment below and share your insights. In the next segment, we'll dissect Nvidia's recent financial performance and analyze the trends propelling them toward chip-fueled domination. Stay tuned. First, let's take a look at Nvidia's current price of $1,224.40. This sky-high price reflects a staggering 147.24% year-to-date growth, and even more impressively, a 32.88% surge in the last month alone. These numbers paint a picture of a stock on a continuous upward trajectory. Now, let's delve deeper into Nvidia's profitability. Their return on equity sits at a phenomenal 115.66%, and their return on investment boasts an impressive 72.34%. These metrics indicate that Nvidia is generating exceptional returns for its shareholders. Furthermore, their gross margin of 75.29% and profit margin of 53.40% showcase their operational efficiency and ability to convert revenue into profit. The party doesn't stop there. Nvidia's projected earnings per share growth for this year is a mind-blowing 107.99%. This suggests that Nvidia's profitability is poised to continue its explosive trajectory. Adding fuel to the fire, their quarterly earnings growth comes in at a staggering 628.67%, and their quarterly revenue growth sits at an equally impressive 262.12%. These figures paint a picture of a company experiencing hypergrowth across the board. Nvidia's financial performance is nothing short of phenomenal. But is it all sunshine and silicon profits? While Nvidia's market cap surpassing Apple's was a monumental achievement, several chart indicators suggest a potential shift in momentum. Technical analysts often use tools like moving averages to gauge a stock's price movement. While Nvidia's price action since October 2022 has been a stunning upward climb, some indicators hint at a possible slowdown. Let's dissect the chart in more detail. Since bottoming out near its 200-week moving average in October 2022, Nvidia has enjoyed a remarkable rally. However, recent retracements haven't reached the 50-week moving average, which could be a sign of strong buying pressure. This suggests potential support zones if the stock experiences a pullback. Earlier this year, Nvidia experienced a 4-week correction of around 20%. While this might seem like a significant drop, it's important to consider the context. This correction followed an incredible 11 consecutive weeks of gains. This pullback could be interpreted as a healthy consolidation period before the stock resumed its upward trajectory. Following a stellar earnings report, Nvidia's price surged to new highs. This reaction from the market suggests strong investor confidence in the company's future prospects. The fact that the stock closed Wednesday's session at a record high, despite the technical warnings, highlights the underlying strength of Nvidia's business. Nvidia's technical analysis presents a mixed picture. While there are signs of potential momentum shifts, the company's robust financial performance and positive investor sentiment can't be ignored. Nvidia isn't just another chip maker. Their cutting-edge graphics processing units and their AI-focused software stack have become the industry standard. Major tech companies are pouring billions into building data centers specifically designed to handle the immense processing demands of AI. And guess who they're turning to for the muscle behind these data centers? That's right, Nvidia. Some analysts estimate that Nvidia holds a staggering 90% share of the AI chip market. That's a level of dominance that's hard to match. And this market share is translating into serious revenue growth. In the first quarter alone, Nvidia's data center revenue reached $22.6 billion. That's nearly equivalent to their entire revenue for fiscal year 2023. This meteoric rise in just 2 years speaks volumes about the surging demand for Nvidia's AI solutions. The skyrocketing revenue isn't the only thing taking flight. Nvidia's stock price has mirrored this growth. soaring an impressive 585% over the past 3 years. This kind of performance is enough to make even the most seasoned investor take notice. But is this just a temporary surge, or is Nvidia on a long-term growth trajectory? CEO Jensen Huang believes the future of AI will require an additional $2 trillion in data center spending. If he's right, then Nvidia could be riding these tailwinds for years to come. Analysts are also bullish, with estimates for 38% annual earnings growth over the next 3 to 5 years. This, coupled with Nvidia's current forward PE ratio of 42, paints a picture of a potentially undervalued stock with significant room for growth. The artificial intelligence revolution is upon us, and Nvidia stands at the forefront. The demand for their AI solutions is undeniable, and with CEO Huang predicting a further $2 trillion in data center spending fueled by AI, the market for Nvidia's products seems limitless. Despite the rosy outlook, Nvidia isn't immune to challenges. Competition from other chip makers, potential economic downturns, and the ever-evolving nature of technology are all factors that could impact their growth trajectory. Nvidia's $3 trillion market cap is a testament to their remarkable achievements. However, don't let the hype cloud your judgment. Conduct thorough research, understand the risks involved, and align your investment strategy with your personal financial goals. Nvidia might be a chip champion, but remember, in the ever-changing world of technology, even the giants can stumble. The future of Nvidia, and the world of AI, is an exciting one to watch. We want to hear from you. What excites you most about the potential of AI? What concerns do you have about investing in Nvidia? Leave a comment below and share your thoughts. Thanks for joining us on Stocks Telegraph. If you enjoyed this analysis, don't forget to like and subscribe for more in-depth explorations of the hottest investment opportunities in the ever-evolving world of technology. Until next time, happy investing.